Let's dive into the world of computer chips, the invisible engines powering our modern lives. These tiny silicon marvels are the brains behind our smartphones, laptops, cars, and even the most advanced defense systems. Without them, the digital world as we know it would simply grind to a halt. From the palm of your hand to the front lines of national security, chips are everywhere, quietly making everything work. They're the unsung heroes of our connected age, essential for innovation and progress. For decades, the US was a global leader in chip design, but manufacturing was sent overseas to cut costs. This strategy seemed smart, until global supply chains broke down, leaving industries scrambling and exposing a critical weakness. The COVID-19 pandemic made this vulnerability impossible to ignore. Suddenly, the US found itself at the mercy of foreign suppliers, prompting urgent action from lawmakers. Enter the CHIPS and Science Act, a sweeping effort to reclaim America's chip-making prowess. The plan? Pour nearly $53 billion into revitalizing domestic chip manufacturing. This isn't just about building factories. It's about creating thousands of high-tech jobs, strengthening the economy, and ensuring the US has reliable access to the technology it needs. Major players like Intel and TSMC have signed on, breaking ground on cutting-edge facilities across the country. These investments promise to put America back on the map as a chip manufacturing powerhouse. But as we approach August 2025, the story takes an unexpected twist, raising new questions about the future of the industry. The government isn't just writing checks anymore. Now, it's considering taking equity stakes in these companies, essentially becoming a part owner in the very firms it's funding. This marks a dramatic shift. It's not just about providing financial support. It's about having a seat at the table, influencing decisions, and sharing in the risks and rewards of the industry. The goal is clear: protect national security and economic stability by ensuring the US has a direct stake in the companies that make the world's most critical technology. It's a bold, unprecedented move, one that signals a new era in American industrial policy and government involvement in high-tech sectors. The stakes have never been higher. What happens next could reshape not just the future of American technology, but the balance of power in the global economy. The US government is considering taking equity stakes in chip companies it subsidizes. This move would transform the government from a patron to an active partner, blurring public and private lines. Commerce Secretary Howard Lutnick champions this idea, arguing taxpayers should share in the upside. The geopolitical landscape has changed, and the free market might need a guiding hand. An equity stake gives the government influence beyond regulatory oversight, potentially affecting major corporate decisions. This strategy aims to align national security priorities with corporate goals. It's a profound shift in American industrial strategy, driven by competition with China and pandemic vulnerabilities. The implications are enormous, with the government potentially having a say in boardroom decisions. This approach could hardwire national security into the DNA of key technology firms. Intel, a major beneficiary of the CHIPS Act and a cornerstone of the American semiconductor industry, is now at the center of a groundbreaking negotiation that could reshape the future of public-private partnerships in tech. The company is in advanced talks with the US government about a potential 10% equity stake, an unprecedented move for a tech giant of this scale. If finalized, this negotiation could set a powerful precedent for other companies seeking CHIPS Act funding, signaling a new era of collaboration and oversight. A 10% government stake would make the US a significant shareholder, giving it a real voice in Intel's strategic decisions, from research investments to global supply chain management. For Intel, the decision isn't simple. While government funding could accelerate innovation and expansion, it also means sharing control and potentially navigating new layers of bureaucracy. The outcome of these talks will send a clear message to the entire industry about what to expect when seeking government support under the new policy landscape. This deal is more than just a business arrangement. It's a test of America's evolving industrial policy and its willingness to take a more active role in critical sectors. If successful, the Intel agreement could become a template for future deals, guiding how the government partners with private industry to secure national interests. Treasury Secretary Scott Bessent has voiced strong support for this approach, emphasizing the need to balance corporate independence with national security and economic resilience. Across Silicon Valley and beyond, the tech world is watching closely as these high-stakes negotiations unfold, aware that the outcome could shape the industry for years to come. The stakes are high, and the final agreement could redefine the relationship between the U.S. government and the technology sector, influencing everything from investment to innovation. Striking the right balance between securing essential funding and maintaining corporate independence is a delicate act, one that will require vision, trust, and compromise from both sides. The success or failure of this deal will have far-reaching implications, not just for Intel, but for the entire American tech landscape. No pressure indeed. Intel's discussions are just the start. The U.S. government's ambitions reach far beyond a single company. The next phase involves a global cast of semiconductor giants, each with their own strategic importance and unique challenges. Other semiconductor powerhouses like TSMC, Samsung, and Micron are now in the spotlight, each receiving calls from Washington as the U.S. seeks to secure its technological future. These companies, promised billions in subsidies to build and expand U.S. operations, now face a new twist: the possibility of the government taking equity stakes in their American ventures. For executives, this means navigating not just financial negotiations, but also questions of control, influence, and long-term partnership with the U.S. government. For TSMC and Samsung, both foreign-owned firms with deep ties to their home countries, the prospect of U.S. government ownership introduces a new layer of complexity. U.S. stakes in these companies could reshape global alliances, adding fresh geopolitical tension to an already competitive industry. TSMC's Arizona presence is more than just a business expansion, it's a strategic move to diversify production away from Taiwan and reduce exposure to regional risks. By building fabs in the U.S., TSMC is helping to create a more resilient global supply chain, less vulnerable to geopolitical shocks. Micron, as a leading U.S. memory chip producer, is vital for America's technological independence and innovation. Its role in the domestic supply chain is crucial, supporting everything from consumer electronics to national defense systems. An equity stake would anchor Micron even more firmly within America's national security framework, ensuring its priorities align with U.S. interests. The government's strategy is broad and ambitious, aiming to shape the future of the entire semiconductor ecosystem. By seeking influence across the value chain, Washington hopes to secure every link, from raw materials to finished chips. This isn't about picking winners or losers, it's about ensuring that the most critical players are closely tied to U.S. interests. The goal is to weave these companies into the fabric of American economic and security policy. It's a bold attempt to reassert American control and leadership over a globalized, highly competitive industry. The leverage of public funding now comes with a demand for a permanent seat at the corporate table, ensuring ongoing influence. The implications for international diplomacy, corporate governance, and global finance are profound and far-reaching. As these high-stakes discussions unfold, the world is watching closely, aware that the outcome could reshape the future of technology and global power. The CHIPS Act allocated over $52 billion to revitalize U.S. semiconductor manufacturing. Companies like TSMC, Micron, and Samsung receive substantial subsidies. Now, the government wants to convert some of these subsidies into equity stakes. This reframes subsidies as investments, with the government acting as a venture capitalist. The financial stakes are astronomical, with potential returns for taxpayers. However, companies must now consider stock dilution and government influence. The subsidy is no longer free money, it's an investment with strings attached. This financial recalibration is happening in boardrooms as companies weigh the benefits. The implications for corporate strategy and financial planning are significant. The government's approach is reshaping the semiconductor landscape. The balance between public funding and corporate independence is delicate. The outcome will redefine the relationship between the government and the tech industry. The stakes are high and the world is watching. The CHIPS Act signals a shift from neoliberalism to a more state-directed economic approach. The government is moving from umpire to player, owning stakes in major corporations. This new model, akin to state capitalism, aims to achieve national strategic objectives. The equity stake proposal is America's response to China's state capitalist model. There's bipartisan support for a more muscular industrial policy. The debate is no longer about intervention, but how to intervene. Government ownership raises questions about competition and corporate decision-making. The U.S. is embarking on a massive experiment, redefining state-market relationships. The outcome will have profound implications for American capitalism. The stakes are high and the world is watching. The core argument for government equity stakes in chip companies is national security. Advanced semiconductors are as crucial today as aircraft carriers were in the past. They power military hardware and critical infrastructure. An equity stake provides direct control and oversight, ensuring decisions align with national security. Private companies prioritize profits, which can conflict with national interests. Government ownership introduces a duty to national security. This strategy prevents foreign acquisitions and ensures secure decision-making. It's a proactive defense mechanism, embedding national security within corporate structures. The government aims to create a permanent link between companies and national security. The stakes are high and the world is watching. Critics argue government intervention could stifle innovation and lead to inefficiency. Companies with government stakes may become bureaucratic and less responsive. There's concern over cronyism and political favoritism in equity for subsidy deals. Companies fear loss of independence and slower decision-making. Government presence in boardrooms could clash with tech industry culture. Critics question the government's expertise in the complex semiconductor industry. The risk is creating a two-tiered system favoring government-backed champions. The debate is about balancing regulation with private sector dynamism. The stakes are high and the world is watching. America is at a crossroads, rethinking its industrial policy with equity stakes in chip giants. This move is a fundamental shift in projecting power in the 21st century. The government is becoming an active player, shaping the economy for strategic goals. The potential upsides include a secure domestic supply and financial returns for taxpayers. However, risks of inefficiency, cronyism, and stifled innovation loom large. The balance between security and freedom is delicate. The outcome of negotiations with Intel and others will set the tone. This is a massive bet on blending state power with private enterprise. The chips are on the table, and the world is watching. The stakes are high, and the outcome will redefine American technological leadership. The world is watching to see if Uncle Sam's big bet pays off.